So I want to do a quick video recap to share how we nailed the top twice today. First round of puts, we got paid 31%. Second round of puts paid us 58%. Okay, so a couple things I saw here, guys, from the morning plan, right? So this is me basically using market structure and supply and demand. So in order to properly trade supply and demand zones, you need to incorporate market structure, because in a directional market going down, the directional order flow bias is going to be that supply gets respected, demand gets violated, and vice versa. So here, I posted this right at the open at 8:30. I said that S&P formed overhead supply from the gap down, 4154, 4170s, right? This was my short zone. So not only am I going to show you why this was valid supply, I'm going to show you, the execution process behind it. Okay, because there is a lot of things, that go into it. For example, this update. So why was this valid overhead supply? I'm going to show you right now why it was valid overhead supply. We can see, if we look left, we can see the market was in fact making these series of higher lows, higher highs, right? So we want to ask ourselves what the most recent structural low was that took out a high. That'd be this, right? Because this low broke structure right there. So upon the gap down, SPX gap down below supply, correct? Right, we open at 4140. So what that means is that this level right here becomes valid overhead supply due to the valid break of structure. Okay, let me delete these. Right, so this is valid overhead supply. So the very first short that we caught was upon the first test. Okay, so the initial reaction, aka the liquidity buildup. That was the first short we caught. Right, that was round one that paid us 31%. That was a 14-point sell. All right, so if we go into my notes in the tweet, guys, right, I had closed my puts out, and then I said, we might get wave C up to break the cash session high, stopping out early shorts, aka they're going to use retail shorts or stops as liquidity. Looking for a high, right? So that was the first exit. Looking for a break above 41.56, and then a breakdown from the bear flag. Also looked like a head and shoulders. You can see, guys, that is exactly what happened here, right? So they run the stops, right, breaking above the high, triggering the head and shoulders breakdown, which gave us our second entry, right? This was our second round of puts. This is where I had alerted shorts again for the second time, which paid us fully 58%. You can see here, right, you get the A up, B down, and they stop out retails, run their stops, and then we get a beautiful fade, guys, down 30 points. That is exactly how we were able to catch the top twice today. But, I just want to show you exactly what I mean behind market structure and supply and demand, and how to actually properly trade these levels. Very, very, very technical market, guys. That was exactly how cut 2 for 2 on the day, and we are done. So enjoy your day. I hope this helps.